Canada is in the midst of an intense diplomatic spat with India, leaving it potentially at risk of falling behind in an emerging market that's increasingly being viewed by investors as a more appealing bet than China. India is seen scoring over China thanks to demographics, domestic investments in infrastructure, and the current geopolitical environment. For more details, joining us now is Adam Turnquist, Chief Technical Strategist at LPL Financial. Adam, thanks so much for making time for us today.
Yeah, thanks for having me. Glad to be here.
Dig into that demographic portion because, I mean, you're looking at the population of India and it is booming, but you particularly highlighted the age of the population in that country. What role does that play?
Yeah, so when you think about India, I mean, it's now knocked China off, and it's now the most populous country in the world. There's about 1.5 billion people in China. It's the first time since the data series goes back to 1950 that China is no longer the largest country in the world. And what's exciting about India is just the age. The median age there is about 28. Compare that to China, it's about a decade older, right around 38. So you have a much more younger working age population. Even on the tail end, on the 65 or older group, a lot more in terms of a percentage of the population in China. You also have rising real wages within India, as well as they bring some of their impoverished part of their population more into the middle class. That's been a big initiative by the government. So it's a pretty exciting growth story in terms of the population. And then when you add in infrastructure spending, the digitization that's going on within India, just their overall nearshoring, or friendshoring, whatever you want to call it. It's a pretty exciting growth story overall.
So take that one step further then. What does that enable? You know, if they have such a growing population of that age, what does that end up meaning?
Yeah, so if you extrapolate that out for long-term growth, they have a sustainable workforce to move into that workforce and continue to grow. They have a huge domestic consumption demand that's being driven by obviously a massive population, but they're also exporting a lot more at this point. So some of that nearshoring as production moves out of China into India, they need more and more workers to support that growth story. And they certainly have a pretty big cohort of a younger age working population there.
We've got a chart showing the performance of the MSCI India Index. Maybe we can bring that up just to take a look at there we go. So it's climbing, and I wonder if you think that the momentum that we're seeing here would continue. I know you're not seeing the chart right in this moment, but it's heading upwards. Do you see that continuing?
Yeah, I think it's not just a trade. This is a long-term investment. We think this growth theme has some shelf life here. And then technically, you can see we're breaking out of about a 2-year consolidation range. We're looking at the MSCI India Index, and you can see momentum is powering that breakout. It's not just 7 stocks or anything like that. This is widespread buying pressure within India that's driving this breakout. So we like the momentum. We like the breadth. We see potential upside in this trade, at least 10 to 15% based on the measured move. And then when you compare it to the MSCI China Index, you can see that relative performance is really what we're trying to capture. It's been a pretty consistent outperformer really for the last few years, and it started to accelerate just over the last couple of years as China's growth story starts to slow. Obviously, they have a lot of geopolitical tensions and as a trading partner as well. So we like it for a longer term trade here.
We've got another one of your charts, Adam. This one comparing fund inflows into China and India. Maybe we can bring that one up. There we have it. So China is the blue line and India is the white line. And we are seeing the inflows into China falling. And what is behind that, do you think? Is this COVID related and all of the restrictions and that sort of thing, or is this something else?
I think it's the entire growth story. So not just the population, not just better GDP growth, not the infrastructure spending. I think those are all factors behind it. I think India is much more stable in terms of their actual growth. I think more people probably believe some of their economic data that gets printed versus what sometimes China gets a lot of question marks on their transparency. And I think if you think about what India is doing in the geopolitical world, they're just signed a deal at the G20, looking at the Middle East corridor, trying to increase trade and as a kind of a competing possible trade negotiation with with China's Belt and Road Initiative. And I think that's just, it's much safer in a world where there's growth, scarcity, and stability. I think that's what's drawing those inflows into India.
Yeah, speaking of economic growth, we've got one more chart of yours, Adam. This one's comparing the GDP of both countries. And, you know, we've heard that, you know, India, the IMF identifying it as the fastest growing major economy this year. And you can see that India, the blue line there, outpacing China. What do you think is really, you know, driving the economy at this point for India?
Well, you have, again, that 1.5 billion population. So there's a huge GDP is driven by a lot of that consumption. You also have just the infrastructure that they're doing. They have about $2 trillion in infrastructure planned between 2019 2025. So they're rebuilding India. A lot of that's in the roads. Again, a lot more people their wireless internet is being brought up. So that digital economy is booming. And I think that's a big factor as well behind that growth rate and just the trajectory of growth overall. You have India's growth moving higher, China's decelerating, and of course they have a lot of different issues with their economy right now on just a near-term basis.
So when it comes to investment in India, say, do you think that India could end up being the new China?
I think if you stack up the list between the two countries, I definitely think you can make that case. Of course, there's caveats to that. Both have their own individual country uniqueness, but I definitely think as an investment, it definitely has that trajectory and that growth story.
Yeah, I wonder.
That I think China once had.
Yeah, I wonder what you make of the, you know, the political situation in Canada. There's definitely some tensions right now between Canada and China because of an accusation that Canada made. And I wonder, you know, how does that complicate things? I'm saying China, but I meant India, Canada and India. Thank you for following along with me, Adam. But I wonder, you know, between these two countries, how does that sort of complicate things from an investor's perspective?
I think on a near-term basis, it creates a lot of headlines. Longer term, these type of events, finger pointing and that elevated geopolitical tensions, I think generally blow over and the market moves on. So I would say longer term, I don't think we'll, you know, it's going to be a major impact.